I need to start this video with what's going on right now. Crypto's dipping right now. And then we're going to get into the real dynamics, the macro dynamics of what is happening. But there's two things I want to mention. One is Japan and what they're getting ready to do. But the other is this, especially right now. The 10 a.m. manipulation is activated once again. This is like clockwork, everybody. Bitcoin dumped $2,000 in 30 minutes as soon as the U.S. market opened. 40 billion wiped out from BTC market cap. 125 million worth of longs have been liquidated last 60 minutes. Just a regular day in crypto now. It really is. Pay attention to Clarity Act. We need that to pass. We need the manipulation to stop. This is a very short-term thing. This is not the bigger picture. Here's kind of the bigger picture. We may see another massive crypto market crash in December. Japan is likely to raise the interest rates again around December 18th and 19th meeting. But this could be the final bottom before the 2026 rally. I can't tell you how real I think that is. A couple pieces of data, and then we're going to get into the dynamics here. In July 2024, when Japan did a rate hike, Bitcoin dropped around 26% in a week. Think of Japan and what they're doing here. These short-term catalysts that can absolutely make markets react violently to the downside. In January 2025, Japan did a rate hike again, and Bitcoin dropped about 25% over the next few weeks. What I want to point out to you is this. They're saying in July 2024, Japan did this, Bitcoin dropped. In January 2025, Bitcoin dropped. Look at this. So let's look at July 2024 on the PMI, the business cycle chart. Here's July 2024 in contraction. Now, what did Bitcoin do actually in October into November, end of 2024? Do you remember? Bitcoin and crypto absolutely pumped. Look at that. And then what happened? Towards the end of January, we started falling, and we've been in a bear market since. Japan, absolutely, short-term catalyst, but business cycle data, and I'm going to show you in this video again, this is the long-term catalyst. This is really what matters most. We will be distracted, I'm sure, this week by maybe volatility to the downside. We will be distracted this week maybe by Japan headlines and crypto and whatever's going on. But please keep in mind the macro. Please keep in mind what we're about to talk about in this video. Bitcoin just survived another black swan. How is this possible? What black swan did Bitcoin and crypto just survive? I want to explain that in this video. We're going to use a total crypto market cap chart. I don't know where you stand in terms of what you think or where you think we are in the cycle right now, but I want to explain in this video exactly where I think we are and why I think right now is the time for all of us to compose ourselves. The entire industry, everybody has been blindsided. We've really just been in this extended cycle that has caught a lot of people off guard, and it's okay. The 4-year cycle is over. And right now we're in a brand new era, a brand new type of flow of these cycles, and I want to explain what's going on. I want to start with a clip. This was from earlier today, a very brief clip, and then we're just going to dive into this video. Hit the subscribe on the way, and let's start.
The Federal Reserve just announced it's unleashing the money printers to finance a $9 trillion wall of federal debt coming due this year. As in, markets won't buy it, so the Fed will with counterfeit money. This is where the Fed types zeros on Excel sheets in the basement, declares their dollars like any good counterfeiter.
If you're a crypto holder, this is a massive deal. Markets, they're not going to buy the $9 trillion. They can't absorb that debt. And guess what? The Fed has two choices in this regard. Either continue to spike rates, right, and break the system, because essentially, I'm not saying Jerome Powell was doing that for years, but the QT for years, the extended QT, the extended draining, it has been breaking the system. And that's what we've been feeling in the crypto, unlike anything we've ever felt before. We're going to talk more about that. Or the other option is for the Fed to provide liquidity. And historically, that's what the Fed chooses to do, provide liquidity. And when the Fed steps in to do that, whether it's through rate cuts, whether it's through balance sheet expansion or debt monetization, guess what it means? Guess what that means? It means more dollars in the system. And when there's more dollars in the system, it most often does not stay in cash. It flows into assets. It flows into risk-on assets like crypto. And so that's kind of where we are right now. And that's why right now, I know it's been an extended cycle, but we need to pay very strong attention And we need to understand the dynamics and the mechanics of what the Fed is getting ready to do because it's so massive for risk on assets, especially crypto. So, and it's not even just about inflation. Like this liquidity pressure that's about to be released, this has everything to do with this chart that I've been just nonstop talking about. It's the PMI chart. And the reason why I've been talking about it so much isn't only because, here's 2012 bull market. You see the green going into expansion. It's not just because every time the green goes into expansion, we're entering a bull market, because that's what these green boxes are. These are crypto bull markets. The reason I've been covering it is look at the current consolidation and contraction on the PMI. It's been contracted for years because of what Jerome Powell and the Fed have been doing. So, I want to be so clear in just explaining to you that this is such a core piece of my thesis. And I genuinely know that even at the start of last bear market, right? Boom, we start contracting. I wasn't covering this data. I know I wasn't. It would have been awesome if I was, but I wasn't. We're always all learning. But right now, the data that is before me, I cannot ignore. So this PMI chart, as we start talking about what the Fed is going to do, and they're saying it openly, this is not speculation. What the Fed is about to do is they are going to print, okay? And this is the PMI, and this is a real-time pulse of the economy. This is a visualization of the economy. And historically, when it's above 50, and you can see it's at 48.2 right now, when it's above 50, businesses are expanding. That's what it means. Below 50, businesses are contracting. And look how long we've been contracting. This is like record breaking. So if you wonder why crypto has been in just this, like why has crypto been failing? Why, as I started the video, how have we survived another black swan? Because this is what we've been going through, this contraction. So it's a little different if you think about the black swan of March 2020 and COVID, because just look at this, boom, boom. This has been way more elongated, and this is just extended like nothing we've ever seen. And that in of itself is a black swan. So what this is saying is like, it's not categorizing an exact black swan event, but it's the RSI showing, man, we just survived basically a black swan, because it says the chart by Real Plan C shows Bitcoin's weekly RSI dipped into 25 to 40 oversold zone for just the 6th time in history, a setup increasingly similar to the 2020 black swan bottom. BTC bottomed at 35 RSIs, now exited the blue zone at 41.5. An oversold basis, 80,600 matched the severity of the 2020 crash. So just look at this, at where we are. This is why, this is one reason why, and I'm going to look at the charts now, but this is one reason why I will not sit here and say we're entering a bear market. Because when you start looking at the macroeconomic data, right, what the Fed is about to do, what I think PMI is about to do, which is start going into expansion, this is why I can't sit here and say, hey, because the 4-year cycle is over, 4 years is up, we're entering a bear market now. This is the end of the bull market. No, it is so opposite for me right now, because this indicator this is not saying this is the beginning of a bull market. This is saying we're towards the bottom, everybody. We're towards the end. And when you bring into play the macro, what the Fed is doing, what I opened this clip with, guess what? Check it out. These marked bottoms. And so that's where I'm coming from. And I want to be very clear about that. So, and the other thing I do want to be clear about, markets very well can start moving before the economy. So it's going to be interesting to see how this PMI chart, right? We talk about business cycle expansion. If this starts expanding, what will risk assets do? And this is a question I have right now, and I don't know, but I'm watching closely, because we might see risk assets don't wait for this PMI to start ticking and closing above 50. They might not wait for things to look that good. They might just start moving just because conditions are starting to change, right? So that's kind of one thing that I'm very curious of in terms of how this starts expanding, because I think it's going to. And I'm not saying even the next time this updates, which I think is probably going to be in like a week or two. I'm not saying we start ticking up. I don't know what this will bring, right? However, how do risk assets react now? Because it has been record-breaking consolidation and contraction. So I want to I want to point your attention to this too. Bitcoin continues longest consecutive extreme fear streak in history. You know, I don't blindly come on here and do bullish content. I'm really trying to explain to you very quickly and simply why I'm bullish. But now if we go to Bitcoin and Bitcoin chart, we can go to altcoin, or not altcoin, but total crypto market cap chart. I do want to explain something to you. Okay. And let's start with Bitcoin. Here's Bitcoin as a very simple visualization. Here's Bitcoin. Yes, it's falling. It's testing the 20-month moving average. That's a big deal. You can see in bear markets, it bottoms below the 50-month moving average or at the 50-month moving average. That's all the way down here at 50 to 60,000. It is absolutely in play. You all know for my risk appetite, I'm always just kind of like, it could all go to zero. Plan on that. Make decisions based on that. Yes, this is in play, but I want to explain why I think things are different than right here and right here. One visualization is, here we are entering quantitative tightening, both of last cycles. Right now, we are at the exact opposite. QT just ended. So if anything, we're going into more an environment of QE. And I've not even been positioning it that much. I've just been saying QT is ending. The draining is stopping. Then we go to a risk model. And everybody, if you're not in our intelligence system, I would love for you to join our members. We have a free trial going on. Go try our intelligence system, our risk models. We have a ton of assets back there. But this is Bitcoin. I want to make a point. And by the way, we're getting ready to raise the pricing at this part of the cycle. I think we're towards a bottom. We're in the bottoming out phase. And we're going to be raising the pricing, but we have the trial going on. So get in and start trying to strategize and plan based on data. I'm incredibly excited about our intelligence system, what we're building. That's why I have no problem. I have no issue coming on here and, as some people say, shilling this. But this risk model is Bitcoin. And by the way, altcoin market cap is at a 15 right now. So that's Bitcoin in the 30s. Here's altcoins at 15. But in terms of Bitcoin sitting at a 34, I just want to say something. If you study the Bitcoin risk model in our system, this is not like a top score, right? We get into the top scores and we've not hit it at all this cycle. And we've not hit top scores since last cycle, 2021, maybe back here in the 70s and the end of 2021. We're at a 34. This is more of an accumulation area. When Bitcoin starts falling into the 20s and below, that's like bottoming out area. And I'm not saying we're going to go there, but if we kind of zoom in on Bitcoin even most recently, you can just see there's 32, 34, 31. We've just been hobbling around in the 30s, right? So from here, I don't know where we go, but what I do know is at a 34, the price was higher 63% of the time after 3 months, 87% of the time after 1 year. And that's an interesting stat because a lot of people think we're about to fall into this crazy bear market. Our intelligence system, backed by data, it's not opinion, a lot of different data, is saying 87% of the time after a year, Bitcoin price is higher. So just keep that in mind. We're at a 34. Do we dip into the 20s? I don't know. I'm not saying the bottom is in right now, absolutely. But what I am saying from a risk appetite perspective for Bitcoin and crypto in general, the risk reward it has been becoming stronger and stronger. And now we have the macro fundamentals that are saying, be prepared, everybody, because I don't know how quick the move will be. But in our intelligence system, these scores start making a move to the upside into overheated areas. It doesn't have to be this system, but you're going to want to have a plan. You're going to want to have an exit strategy, know when to start selling based on risk or data, not emotion. And that's what this system will do. And I really do think as the Fed starts doing what they're doing, if inflation gets out of control or if just things start going crazy, I think risk assets are going to go crazy. And you're going to want to have a plan. And it sounds crazy because right now it is true. Like Bitcoin is in the longest consecutive extreme fear streak. The engagement, the interest in crypto is like, I think I just was reading, is like a 5-year low or something. It's terrible. So it sounds crazy for me to talk about this right now. And that's okay. I don't mind if I look crazy. But going to the total crypto market cap chart, here's what we're looking at now. And by the way, this is where I want to explain why I don't think we're entering a bear market, we're entering some crazy move. But if this starts expanding, the question is what happens to crypto risk on? And the chart that backs this up very well is this one. Here are crypto bull markets in green when we start expanding. Is that to say it's absolutely going to repeat? No. Russell 2000, way more data. A very nice kind of visualization of economic activity, the Russell 2000 and what it consists of in terms of the companies there. This has way more data that says when we get into expansion, Russell 2000 goes up. This is something we've been talking about. So if we go back to this chart, the question is, well, why are we not here? Because look at this. The 20 is fast approaching the 50. We're about to fall below the 50 moving average. This is what happened. This is exactly what happened in the beginning of last bear market. Boom. How are we not there right now? What's going on? Because this is what happened 2 bear markets ago, right? 20 approaching the 50. We're about to fall in a bear market. 4-year cycles up, about to fall in a bear market. 4-year cycles up. We're falling into a bear market. How could it be that that's not repeating? Well, guess what? Again, this was all QT. Look at this PMI in green, falling and contracting, record breaking. That's what we've been through. And look at it back here, that bear market, falling PMI, falling and contracting, right? QT, first QT that ever happened in 2018. That's where we're getting the bear market from. Now, those things are not happening right now. The exact opposite is starting to happen. So I can't sit here and say we won't continue consolidating or even trickling down a little bit, but I'm just saying in terms of the macro and the cycles, this is why I don't think we're in this environment where we're about to fall. Because look, if PMI does start expanding, right? It was falling back here into the bear market. This cycle is different. And I think, and I could be wrong, I just think it's going to throw a lot of people off guard. Because a lot of people are like, dude, this is the exact setup of previous cycles. And it's just not. From a charting perspective, it is. It looks very similar. But from a liquidity perspective, from a business cycle perspective, we are in the complete opposite of where we were right here. So that's what's kind of crazy to me. And I wanted to try and present that to you. Looking at the Bitcoin dominance chart, I'm just intrigued by it. I am straight up trying to just take my time here because it's been so sideways for months. This is a weekly. And look at this right at the 20-week moving average. 20 just fell below the 50. If we get PMI expansion, everybody on the Bitcoin dominance chart, yeah. But if the PMI starts expanding on the Bitcoin dominance chart, just look when it starts expanding what Bitcoin dominance does. It falls, right? Starts expanding back here 2 cycles ago, it falls. If this starts expanding, we might see very well that Bitcoin dominance will fall and altcoins will have their move. Altcoins are severely, in my opinion, severely undervalued. And it sounds, again, unpopular to say that, and that's okay. I don't mind sitting here with that contrarian view. But the data says it. When we look at PMI expanding versus Bitcoin, what do altcoins do? They outperform. I did this video, as you know, mid-May. Altcoins less risky than Bitcoin, and they were. And now we're down here. We're lower in terms of Bitcoin dominance. And I think this story will continue even stronger than what we saw start back in May. And again, our risk models, if you go to altcoin market cap, 15, Cardano sitting at a 19, Chainlink at a 25, Sui at a 27, everybody. I do not know what will happen, but I do know as we get continued insight on what the Fed is doing, we get continued insight on Trump and the Trump admin's agenda going into 2026 with rate cuts and the new Fed chair in May. It's a good time. It's a very good time to plan. It's a very good time to compose yourself. It's a very good time to ignore emotion, to ignore all of the fear and uncertainty and doubt headlines that are out there. And by the way, I was actually reading comments on this post, and I thought it was funny because somebody posted this: experts are baffled this time around. But look at this headline from July 2020. Here's why economists don't expect trillions of dollars in economic stimulus to create inflation. By the way, it did create inflation. This was July 2020. The bull market, the crazy parabolic bull market started in November 2020, right? just months after this post. But be careful reading headlines is my point, because they either don't really know what they're talking about, or number two, they're purposely creating kind of an illusion for the readers on what really is happening. So those are my thoughts today, everybody, as we start this week. I hope you're doing well out there. I'm just trying to hang out. I know it's just a tough time for everybody. I get it, right? It's a tough time for the crypto space, but let's pay attention to everything going on. There are so many good fundamentals too that are happening right now. And you might be like, why doesn't it matter? It doesn't matter very simply because we've been in years of contraction in QT, and you can just see it on these charts. But now, fundamentals plus expansion now, and the drain is stopped. I just want to be ready for it. That's all. Could I be wrong? Yes. But if I'm right here, I want to be ready for it. So I appreciate you watching. Hit the subscribe and like on the way out if you enjoyed this content. And if you're not in our intelligence system, I invite you to join our members. Try it out. Free trial. If you don't like it, cancel before it's over. But if you are a macro investor, I think you'll like it. I think if your asset is back here, and you can check on our website, you will enjoy making kind of a strategy and planning for what is about to happen. If you're like me right now, I'm sitting back. I'm planning. Take profit areas because I don't want to mess it up this cycle. So that's why we built this system. So I appreciate you watching. I will see you all in the next video. God bless.